Good day, everyone. Unfortunately, I have to cancel this week's webinar due to a death in my family, so I'm going to do this recorded update for this week, and we'll be back to our regular webinar schedule for next week. Okay, before we get going, we need to go over our disclaimers and remind you that the presentation is given for educational purposes only. We're not broker-dealers or financial advisors, and we're not making any specific trade recommendations. Also, please be aware that the risk of trading and options can be substantial, so please be aware of all your risks prior to placing any trades. And also a note that we are using hypothetical computer simulated trades, and therefore our results may vary, although they are believed to be as accurately represented as possible. If you get a chance, come on over to our website at lockeinyoursuccess.com and check out our programs, the M3 Bearish Butterfly ROCK group coaching, trading triangle, and now the M21 program. And make sure to join our mailing list and get your free report, 7 Secrets to Becoming a Successful Trader. All right, let's just take a look at the markets. If you recall, last week we were saying that the SPX had technically broken out, but I wasn't taking that all too seriously. I thought it was likely to fail. Well, so much for that. The SPX, it did sell off on Monday morning, but then the bulls came right back in and closed the day near the highs. On Tuesday and Wednesday, just refused to sell off, and the bulls were just holding it right out at the highs, which was our first indication that we may not be going down. And then on Thursday, the SPX finally broke out along with the Dow and the NASDAQ. We did talk about this possibility last week, and said if it did happen that it was going to be a big move up in the Russell, because the Russell's been lagging behind, and as soon as you get all the other indices going bullish, the Russell's going to try and catch up. So we did get a pretty good move in the Russell last week, especially Thursday and Friday. And even though that did happen and we talked about that possibility, I was thinking that the Russell would, if we come back to the rut, I was thinking that the Russell would, come up to about 1160, and then probably roll over in that range. But on Friday, you can see we even exceeded that number. Now, again, I don't know how much I would actually put into the Russell exceeding 1160 because it does tend to overrun its resistance and support levels. And we have the SPX that's a little overextended, and I do emphasize a little overextended. It still can run quite a bit, but it is somewhat extended, and that given the case, the indices, while this breakout does or should imply that the indices are probably going to go higher, which means the Russell itself is probably going to go higher, I would expect it to slow down a little bit. So what I'm thinking is the Russell's going to try and reach for 1200 to 1215, probably these old highs up here. It's probably going to do so. This is a legitimate breakout, but you see it's nowhere as fast as it was back here in late January into February. It's a lot slower of a breakout. I would expect it to stay at about that speed. If that's the case, then we should be either slowing down and just grinding up, or it's possible if the SPX wants to come back and retest a support level that we may pull down to around 1130, but I think it's more likely we're just going to kind of tend to grind up from here. That is our most likely scenario. So basically our long-term opinion is that the market and the Russell is going to be bullish. However, we have too many conflicting indicators to actually choose a short-term direction. So overall bullish, short-term is neutral. We just don't know. All right, let's take a look at how our position fared for last week. If we look at our June V Condor, this trade has had no adjustments. We're still sitting in this position. Realistically, we could close this any time. Take a profit probably around $2,300. Right now we're sitting up. It's at about a $2,400 profit. Realistically, I am not concerned with these shorts at 1142 in the next 2 weeks, and at 1240, and I'm not concerned with these shorts at 1010 for the next 2 weeks. So, as per plan, even though we're getting some really rapid movement in the market, as per plan, just going to let this expire. I mean, if we get too hot to the upside, I mean, we'll close it down, but I don't expect that to happen. I think we should be fine. So that's what's going on with the June V Condor. Let's shoot over back to Monday, and we'll take a look at the M3 for June. If we take a look at our June M3 on Monday, you can see we had 10 1050s, we're short 10 1100s, short 5 1110s, 5 1120s, long 10 1150s, and we had our call way down here at 980. Didn't do anything here until Thursday. And what we did Thursday is we did 5 here. Thursday we did 5 11 10 1130 put verticals and 3 1120 1130 put verticals to bring us into this position here. We did get beat up a little bit on our profit and loss because it was such an aggressive move, and our delta was getting a touch high before it took off. So this is our position as of close on Thursday. All of our Greeks are looking good. We come to Friday, and of course we get another 11 points, and that's a big move this close to expiration, right? So you figure we're up 31 points in 2 days. And what I ended up doing is locking this, what I call locking it down. What I did is I sold this 980 call. I took my 950 longs. I rolled some of them back to here, and I took out some of these shorts, and I went into a position that looks like this. So now I like to do this if the position's up money and we're dealing with a runaway market, which is basically what we may be dealing with if the market takes off. I like to do this because now if the market continues up, at least I've locked in a profit of around, what do we got, $2,000, about $1,900. Realistically, if it pushes up a little bit higher, I'll be able to widen these spreads out a little more. I'll probably be able to take about $2,000 out of this. And if the market settles in and comes back over a few days, I can still maybe make something else out of this. But realistically, if we get 5% out of this month, I'd be happy with the way the month is going. So that's what the June M3 looks like. Everything's fine. If we go to the June ROCK trade, let's go back to Monday with that one. So here's our June ROCK trade as of Monday. It's about $3,900. Now, one of the things that we talked about here is, if you remember, I converted this from an M3 into a ROCK position, and we're talking about that this type of position does not like really large price moves. It doesn't like them at all. So, and when we converted it over, we also talked about that we were really borderline on whether we should have done it at all, because our when we did our entry test, it was kind of a judgment call on whether you wanted to do this. I figured the market was going to when we were talking Monday, maybe go up a little bit more at 11:30 and then probably back down. So I was perfectly happy with this position. Figured we were going to stay sideways, but as the market goes, the market does what it wants to, and obviously the bulls came in and took off on Thursday. So let's see how this fared here. On Thursday, by the end of the day, we're all the way up to 1151. Drew us down to about plus 1,500, so pretty good drawdown. What we ended up doing in here is adding the rest of these butterflies here and adding in our butterflies up at 1180. So if we look at our T-log, we came in here, we added 6. The remaining 6 that we had to do to fill out our 1160 butterflies, and then we started adding in our 1180s. And this is what we had at the end of the day. Let me just make sure our T-log's all marked in. It is. And on Friday, we obviously got the continued up move. So what we do with the ROCK trade in those circumstances is we continue to add in our 1180s. So now we're fully scaled into the 1180s. And then I pulled off 4 of our 1120s. Here is what the position currently looks like now. So as of right now, it is drawn down about $1,200. Realistically, if the market does what I think it's going to do, and it just kind of continues to creep up, this should do pretty well. I mean, our theta is really high. Value really comes into butterflies when the market starts moving, and this should be looking pretty good. So I'm still happy with the position, although I would have been happier if the market movement was a little bit slower. Would have made for a really nice, easy trade coming into expiration here, but yeah, it's going to fight us a little bit, so that gives us a challenge. And that's all we have for the June trades because we already closed out the bearish butterfly for June at our reduced profit target. And let's just scoot out to July, our July V Condor. They don't like really big moves either. They usually deal with up moves really well. Let's just scoot out to here. But we are drawing down about $1,300. We're currently about minus 97 delta. During the week on Thursday, actually, I bought back 2 of these 1,200 calls. And up here, so now we have 13 of these. Market goes up any more, we'll be buying back more of those. As we're sitting right now, though, this is what the position looks like. It's perfectly fine. If the market slows down and continues to grind up, that's actually a good thing. If we start pulling much over 1185, well, that's going to be tough for this trade. But everything so far is going pretty well. And last but not least is the July bearish butterfly. Which did kind of get beat up because we were scaled in 2/3 before this thing took off. We were actually scaled in 2/3. We're sitting here 10 1100s, 10 1120s. On Thursday, we ended up with a delta theta problem, I believe. Yes, we ended up with a delta theta problem. You see we're minus 254, 159, and towards the end of the day here. So what we ended up doing is taking those 1100s and rolling them to 1140. You can see that move right here. So if we go to the end of the day, this is what we look like right here. We have our, 1120, 1140 butterflies on. And from here, if the market did pull back, that would have looked really nice, especially if it held 1160 and pulled back. However, obviously it kept going. So on Friday, we exceeded our last add point at 1160. And we went in and added our 1160 butterflies. Position's currently down about 1/3 of maximum loss, which is about normal for a move, for a bearish butterfly when you have to get 3/3 scaled in. So this is still looking pretty nice. If we take a hard shot up into 1200, we're probably going to take a loss on this. But if the market moves relatively slowly, then this should be fine. Certainly if we back off, we'll be looking really nice here and be in the middle of the position. So that's all the positions we have for this week, and we'll see where the market's going. Right now, short term, it's a tough call. Longer term, we are still bullish. So I hope everybody has an awesome week, and we'll talk to you next week at the webinar.